I'm Thirini. We are group number 14. The topic we are presenting is comprehensive financial statement analysis by using ratio analysis. So we have selected two companies and plantation sectors, and we used the interim financial statement for the 6-month ended 30th September 2024 of Muskelia Plantation and Thalawakali Tree statement to perform the financial statement analysis. So next we will compare 5 types of ratio through financial ratio analysis. These are profitability ratios, liquidity ratios, gearing ratios, efficiency ratios, and investor ratios. Profitability ratios are financial metrics used to evaluate the profitability or financial results of the business. They help to find out how efficiently a company is operating and how well it is using its resources to generate earnings. Under the profitability ratios, we have calculated gross profit ratio, return on capital employed, and return on equity.
I am Nafra. Now we will see gross profit ratio of the Muskeli plantation and the Talakele tea estate. According to these calculations, the company for every 100 rupees it earns from sales, Muskeli plantation keeps 27 rupees and 10 cents. Talakele tea estate keeps 21 rupees and 40 cents as profit after paying for the direct cost of making its product. The remaining go towards covering the cost of goods sold, like materials and labor. Therefore, compared to the Muskele plantation and Thalakale tea estate, is good at keeping the cost of sales low, possibly because they are controlling cost well or selling product at higher prices. Therefore, Thalakale tea plantation is better.
I'm Naoda. This slide shows the operating profit margin of the Muskelia tea plantation and Talakele tea estate. According to the calculation, Muskelia plantation makes 22 rupees and 10 cents of profit from its main business for every 100 rupees of sales, and Talakele tea estate makes 16 rupees and 30 cents of profit from its main business for every 100 rupees of sales. Therefore, compared to the Muskelia plantation, Talabakali tea estate has lower operational efficiency before considering financing costs and taxes. Therefore, Muskelia plantation is better in terms of operating profit margin.
I am Padya. Now let's see net profit ratio of the Muscalia and Talakale tea estate. According to the calculations, for every 100 rupees the company earns from sales, Muscali plantation keeps 19 rupees and 80 cents and Talakale tea estate keeps 14 rupees and 8 cents as profit after paying all its expenses, taxes and interest. Therefore, compared to the Muscali plantation, Talakale tea estate has a lower percentage of revenue translated into profit after all expenses and taxes. Therefore, according to the net profit ratio, Muscali plantation is better.
I'm Shashini. In this slide, we compared return on capital employed. According to the calculations, for every 100 rupees the company uses in its business, Muskelia Plantation earns 6 rupees and 80 cents and Talavakele Tea Estates earns 6 rupees and 60 cents as profit before paying interest and taxes. Therefore, compared to the Muskelia Plantation, Talavakele Tea Estate is generating lower profit from its capital employed. When comparing the condition of Muskelia and Thalakale tea estate under the return on capital employment ratio, Muskelia plantation is better.
I am Danusha. Now let's see return on equity of the Muskelia and Thalawakale tree estate. As per the calculation, for every 100 rupees the owners have invested in the company, Muskelia plantation made a profit of 11.30 rupees and Thalawakale tea estate made a profit of 8.20 rupees over the year. Therefore, compared to the Muskelia plantation, Thalawakale tea estate shows the lower return generated for shareholders based on their equity investment. According to the return of equity, Muskelia plantation is better.
Now we talk about liquidity ratio. Liquidity ratio refers to a company's ability to pay its short-term debts using its short-term assets. It shows how easily a business can convert its assets into cash to cover its immediate financial obligations. Under the liquidity ratio, we have calculated current ratio and quick ratio.
In this slide, we compared current ratio. According to the calculations, for every 1 rupee of short-term debt, Muscalia Plantation has 1 rupee and 29 cents and Thalavakkala Tea Estate has 4 rupees and 7 cents in current assets to pay it off. Therefore, compared to the Muscalia Plantation, Thalavakkala Tea Estate has very strong ability to meet its short-term obligations. Therefore, Thalavakkala Tea Estate is better in terms of current ratio.
Okay, now let's see quick ratio. As per the calculations, Muscalia Plantation has 66 cents and Thalakale Tea Estate has 3 rupees and 43 cents in liquid asset for every 1 rupee of short-term debt it needs to pay soon. Therefore, compared to the Muscalia Plantation and Thalakale Tea Estate has very strong ability to meet its short-term obligations.
Now we talk about gearing ratios. Gearing ratios refers to the relationship between a company's debt and its equity. It shows how much of the business is financial through borrowing compared to what is financed by the owners. Under the gearing ratio, we calculated debt to equity ratio, debt to total asset, and interest coverage ratio.
I am Dushani. This slide shows the debt to equity ratio. According to this calculation of every 1 rupee of money invested by the owners, Muscalia Plantation has borrowed 1.29 rupees and Thalakale Tea Estate 56 cents in the debt. This shows Muscalia Plantation uses slightly more debt than equity to finance its business and Thalakale Tea Estate uses much less debt than equity to run its business. Therefore, Muscaria Plantation has higher financial risk compared to the Thalavakkala Tea Estate. Therefore, Thalavakkala Tea Estate is better in terms to debt to equity ratio. This slide shows the debt to total assets. In Muscaria Plantation, 56% of the company assets are paid for with borrowed money, while the other 44% are paid for with the company own funds or money from owners, and in Thalavakkala Tea Estate, 36% of the company assets are paid for with borrowed money, while the other 64% are paid for with the company own funds or money with owner. Therefore, Muscalia Plantation are higher financial risk compared to the Thalakale Tea Estate. Now let's see interest coverage ratio. According to the calculations, Muscalia Plantation can pay interest expenses 16 times and Thalakale Tea Estate can pay its interest expenses 22.3 times over with its current earning before interest and taxes. This shows both companies are very strong financially and easily able to meet their debt interest payment without any trouble. Next, we have efficiency ratio. Efficiency ratio is the financial metric that measures how well a company uses its assets or resources to generate income. It might refer to various efficiency metrics like stock turnover ratio, receivables turnover ratio, accounts payable turnover ratio, and assets turnover ratio.
In this slide, we compare the stock turnover ratio. According to the calculation, Muscaria Plantation sold and replaced its inventory about 1.29 times, and Thalavakkala Tea Estate sold and replaced its inventory about 3.663 times duration in the year. Therefore, compared to the Muscaria Plantation and Thalavakkala Tea Estate has higher turnover.
Now we talk about receivable turnover ratio. Muscalia Plantation, the money owns by its customer about 2.8 times, and Thalavakkala Tea Estate, the money owns by its customer about 8.64 times in year. Therefore, Thalavakkala Tea Estate is collecting payments quickly compared to the Muscalia plantation. Now let's see account payable turnover ratio Muscalia plantation pay off what is owns to suppliers about 1.92 times a year, and Talavakale tea estate pay off what is owns to suppliers about 2.9 times a year. Therefore, Muscalia plantation takes a long time to pay what is owns their Talavakale tea estate.
I'm Dulanjan Manohar. This slide shows the asset turnover ratio. According to the calculation, for every 1 rupee or dollar of asset the company owns, Muscalia plantation makes only 26 cents and Talavakale tea estates makes only 36 cents in sales during the year. This shows both companies are not using their assets very efficiently to generate revenue. But Talavakale tea estate uses their asset effectively compared to the Muscalia plantation. This is the summary of overall presentation. We analyze the financial performance of Muscalia plantation and Talavakale tea estate using interim statement for the 6 month ending 30th of September 2024. The analysis covered profitability, liquidity, gearing, efficiency, and investing ratio. Muscalia performs better in profitability and shareholder returns, while Talavakale excelled in liquidity, had lower financial risk, and showed greater operational efficiency. Overall, Muscalia is stronger in earning capacity, whereas Talavakale is better in financial stability and resource management.